Welcome. With about 2.5 hours to go before the end of the session, let's take a look at markets here. We can see general market in the US are called and are trading at session highs for now. And if we take a look at the cryptos, we can see that Ethereum is also higher for the day and close to session highs. And so is BTC, higher for the day and towards session highs. Let's take a quick look at market performance for this week, the first week of 2023. We can see markets are positive, the leader being Ethereum up about 5.6 and the Dow S&P 500 up about 1.4%. Let's begin this weekend analysis by taking a look at the Dow Transports. Dow Transports up nicely, about 3.16%, a huge up day, and this is consistent with our understanding of the RSI. Why? Because the RSI today is pushing above 50. Hence, you can expect a big up day, something I've been teaching on this channel for many years. Not only the Dow Transports, even the Dow Industrials themselves up nicely, about 2% at the moment. Nice up day here, moving out of this recent range. And institutional managers have to respect this movement of this range. As long as it is above this range, you have to start leaning towards a market that wants to move higher. And again, technical reason for my understanding why we're having a nice day. The Dow on the daily, moving its daily RSI from below 50 to above 50. Same thing can also be said for the S&P 500. Again, moving above 50 for the day. SPX, nice up day here. We can see that the Canadian market also not to be left behind, having a nice day. Why? Because it is moving its daily RSI above 50. Now let's take a look at the 2 hourly for the S&P 500. After this nice move, we can see it's coming to an area where there could be a little bit of a pause, or at least, let's say, a challenging spot for the S&P 500. On the 2 hourly, there's this line connecting recent RSI highs. You can draw them this way. We can draw it even this way. That's an area for consideration. Also, it is an area where we break down here recently in middle of December, and that RSI level is also going to be tested like that. That's where it's trading. It needs to move above this line here. If hour to hour, we're going to continue to see the market push higher. And there's also another line, which is a simple backtest line. If we draw it this way, it will be something like that. Again, this line here gives us information in the following sense, where we break below this line and it has been acting as resistance while the market has been range bound here. So you can see for today, it is doing its best to clear this area. So if it can stay above the 3 lines, and just to summarize quickly, we can say line number 1 is a topside line. You can draw it as such. Line number 2 is a uniformity line as such, and line number 3 is this backtest line. Would need to be above all of these lines if the market is to enjoy another follow through day. Otherwise, hour to hour, it's an area to anticipate logical pullback, or at least a pause, irrespective of what the next direction from a swing trade perspective is going to be. Taking a look at the NASDAQ weekly, remember I've been encouraging you to use the previous weekly closing low for the NASDAQ from October of 2022 at 10,321.39. And the thinking here was that as long as we are testing but not breaking that level, not closing below that level, which is the case now, then this is a market that ultimately sets the stage for major lows and starts moving higher. And at the same time, if we are to stall and if we break this level, close below it, that changes the picture and the market would be poised to go lower. For now, the market has held, and this takeaway is very simple. Since we are holding, remember, it's the market doing this. It's not me. It's not you. The market is choosing to hold here. We have to anticipate that what the charts are telling us from a neutral perspective, that this market is now sideways to higher. Remember also, we have the topside line that is going to come in play here in the next couple of weeks. There's this line here, which of course gave us the resistance into late 2022 here on a weekly time frame. And also we have the consideration of the RSI lows line, which seems to want to hold. So this line here is giving us support. So we are still wedging. And ultimately, what the bulls want is we move above the topside line and continue sideways to higher. Otherwise, what the bears would want to see is ultimately we break this RSI lows line. We break 10,321 on the NASDAQ and we go down. Right now, we have to lean towards a market that seems to be more promising to the upside. For the Dow Transports, again, remember it's very early in the month and in the year, but for now, the monthly for the Dow Transports is also moving its monthly RSI above 50. And what that means is that there's a good likelihood, if the Dow Transports can hold above 50, that ultimately we have a big month and we close towards the highs of the month. That generally tends to be the case whenever you're moving above RSI 50. On the monthly, you move above 50. By the way, let's go back to the Dow monthly, and I would like to propose that the Dow has already bottomed. In fact, we might look back in the months and years to come and see that these were major lows. In other words, the Dow is done going down. It has already bottomed, is now in the process of sideways to a higher market. So again, let's also not suspect that the market has to come back and test these lows. There are signs, and I'll show you a simple way of looking at it, that this low on the Dow in September, October of 2022 was the low and the market's done. Yeah, the NASDAQ came close to breaking its lows, but the Dow is done going down, or at least a major drop, because if you take a look at the line we were drawing many months ago, remember the Dow came back and held this simple line that connects the RSI lows of early 09, early 2020, and also tagged it here in September, October of 2022. So from this standpoint, the Dow has already bottomed. S&P 500 also on the monthly is approaching 50. So if it can take back the level above RSI 50, and don't forget that the uniformity principle line, this line here, was tested, and we can say it held just like it did in 2020. So in late 2022, this line held, and of course we've seen the market be sideways to higher since October. Now, if the S&P 500 can reclaim the level above RSI 50, what that tells us, believe it or not, is that we are now in a market that could take out the recent highs of 2021, early 2022, and go to fresh all-time highs, as long as the monthly for the S&P 500 can stay and hold and build above RSI 50. Remember, the S&P 500 on the daily had already come back to test this line, and we tested it a couple of times, and this held based on the uniformity principle. Again, a concept by yours truly, an original concept. We can see this comes from the lows here. In other words, the sentiment was tested again. It held here in late December, and now we're starting to build to the upside. That's a positive for bulls, and also the NASDAQ was tested, but you can see the RSI did not break this line. In fact, we can say that it tagged it a couple of times and is now pointing high. So these lows on the NASDAQ could also be positioning themselves for a market that could be sideways to higher in the coming weeks and in the coming months. Taking a look at this new ETF that is inverse the VIX, we can see that it is breaking out, and it currently does meet the minimum requirements that I look for, that I've been looking for, and requirements that are successful in timing major moves. So we can see here this instrument is breaking out, which means the VIX could be poised to go down, and usually when the VIX is going down, the general market is moving higher. The level here to watch is 14.68 on this ETF. If it can hold above this recent weekly closing high, then this breakout should take it higher. We can see that it missed the minimum requirements, because we can see that the RSI is moving to fresh highs here, and the MACDs are already moving and are in fact at fresh highs as well. So if this instrument is moving higher, it means that the general market should be sideways to higher in the weeks ahead. Now, of course, if this breakout fails, then that would give us information that the market is not ready to move higher. In other words, a failed breakout here would mean that the VIX is moving higher and the general market is moving lower. Net, this is a positive for market bulls at this current setup. Now, let's spend a second here and digress a little bit and bring something to your attention. So this is ARKK, and of course, this instrument is down massive over the last, let's call it 2 years plus. Huge. The highs here are in early February of 2021. This instrument is down huge, down about 80%. That's big for an ETF. Huge drop. Now, what I want to talk about here is it peaked early before the general market. If we compare to the S&P 500, we can see this instrument peaked in February of 2021. S&P 500 would peak in, let's call it, about 10 months later, which is late 2021. So as the S&P 500 went higher here, this instrument was sideways. As the S&P 500 started dropping, this instrument broke its base, this range, and it would go into a substantial loss. What I'm trying to say here is usually there's going to be something that's going to be leading the way. In this case, ARKK was the leader on the way down. Now, I bring this to your attention because we are seeing something different, in my opinion. Remember the Chinese names. For example, if you take a look at this ETF, KWEB, which tracks Chinese internet names, we can see here it also peaked at the same time in February of 2021. S&P would peak here in late 2021. This instrument has already bottomed, just like the Dow, and is coiling higher as the NASDAQ is struggling early in 2023. So this could be the leaders or at least starting to set the stage where some portion of the market has already bottomed and is pointing higher. In fact, even from a daily perspective, this instrument is staging a nice, fresh, more divergent breakout. We got a flat moving average here in terms of the 200-day, an upward coiling 50-day moving average. It's breaking out of this range. This is what you want to see when an instrument is setting the stage for a massive recovery in the weeks and months ahead. Yeah, a couple random names. GDS here. GDS is a ticker symbol. We can see that this instrument also has had a big down move from early 2021 and looks to have bottomed here. The lows, in fact, it's seen a nice recovery from the lows here. Lows under, let's call it about 8, and has gone to trade as high as 28 over the last 2 months or so. It's an environment that now is starting to favor breakouts. We can see here this breakout, and some of our recent breakout picks over the last 2 months or so have really been on fire. This stock broke out under 3 and has gone all the way to 14 in a couple of months. A nice breakout alert there for clients. We can also see another stock here, CPRX, showing that breakouts are working. Here we gave this breakout entry as an alert, and another alert was issued for subscribers right here. So we are seeing some names already breaking out and holding on very well. Here's another one that has essentially doubled since middle of December. When I gave this alert, the stock was breaking out here. That was under 14, let's say. It has gone to trade as high as 26 over the last 3 weeks. So some things are working. So we shouldn't be concentrating entirely on thinking the market has only one option, which is to go down. Some stocks are breaking out if you know what to look for. And not only are they moving higher, they are doubling and tripling in price in a couple of months over the last couple of months since late 2022. So we need to be on the lookout and on the scan for major breakouts. Again, if you know the minimum requirements, it should be one strategy. Take advantage of explosive instruments. This week, we saw the NIFTY down about 1.3%, but I don't think it's really out of the picture or is going down necessarily because it hasn't broken the RSI 50 on the weekly, and on the daily, I think it's coming back to test this line here. Remember, I've been talking about this line for a couple weeks now. In fact, going back to the lows here, we can see that this is where we make the lows in June 2022. We held here. Eventually we would build, and essentially we've tagged this here in mid-December, and we're coming to test it here. So I think the Nifty on a day-to-day basis, if it can hold this area, I would anticipate that the next meaningful swing trade for the Nifty is also to start moving to the upside. Of course, you'd want it to really reclaim momentum by moving above its 50-day moving average. So that's something to watch for. You'd want to see prices eventually moving above the 50-day moving average, so this market can also be sideways to higher in the coming weeks and months. On the monthly, what the bulls want to see here is the Nifty breaking out. We need to see a breakout. If the Nifty is to go into a major run, it would need to clear the monthly closing high from November, and that's at 17,959.20. A breakout is needed if this market is to go into another major run, just like it did in this phase here. We would need to see the RSI. Prices would have to break out, just as we got a nice breakout here, and the RSI would have to move back above 69.1. So you need a price breakout. You need the RSI on the monthly to move above 69.1 if you're going to go into a major multi-month move to the upside. So I would watch 17,959.20, an area the Nifty needs to clear and break out if it's going to move higher. Taking a look at gold by way of GLD. If we go back, Muadhi.com clients, remember when I was talking about this being an area to watch for support? That's about 3 months ago. That's GLD. Of course, those lows have held just like they held here in late 2018. And now we can see from a weekly standpoint, not only is it stable to bullish, it is actually moving above this range here on this weekly chart for GLD, and on the daily, after a little bit of a confusing couple of days here, we can see the breakout for this week remains intact, and it is closing at fresh multi-month highs for now, going back all the way to about middle of last year. So about a 6 to 7 month high for GLD. That's what the bulls want to see. And by the way, for this month, GDX, the ETF that tracks the gold miners, is moving its monthly RSI above 50, which starts bringing the possibility that this month of January could be a big up month for GLD and GDX. As long as the monthly is above 50, chances are we close higher much higher, and we close at session highs for the month of January. Taking a look at XLE, just like the Nifty, if the energy space is to break out, if it's going to reclaim its leadership, XLE would have to break out on the monthly above the recent monthly closing high of 90.22. Without a breakout, this is going to be sideways and ultimately could break lower. So a breakout is needed. It needs to reclaim the level above RSI 69.1 if the energy space is to continue being sideways to higher and continue staying in the leadership. What is confusing is if you take a look at crude oil for the month of January, this month is moving its monthly RSI below 50, and that opens the possibility, if it stays below 50, for a big down month and potentially closing towards month lows. So if the energy space is to move higher, if crude oil is to move higher, it needs to hold its monthly RSI above 50. Right now it's moving below 50. That opens the gate and the probability that crude oil could be seeing lower prices to sideways prices in the coming weeks and months. Taking a look at Bitcoin, remember we've been talking for many weeks that it needs to clear this topside line on its weekly RSI. We've seen that it's been wedging over the last couple of weeks, if not last couple of months, and a breakout is needed if the bulls are to push this above the current range. And of course, we've been discussing the possibility that this could also, if the market chooses to, if it turns into a break, expect the cryptos to go lower. Right now, it looks like it is at the top edge of this line. And again, BTC, if it's going to move high, it's going to have to clear this topside line. Remember also, I've been talking about the MACD needing to clear this range. Recent highs on the MACD need to be cleared. So if the MACD can move above this range, and also movement above the MACD zero line is really going to bring a lot of upward thrust in moving the cryptos to higher ground. Same thing with Ethereum. On the weekly, it's been wedging for many months. And so if it's going to move higher visually, it has to take out this line. That's the only way. And if it's going to move higher, the MACDs are going to have to prove themselves by moving above this range, which has been resistance in the last couple of months. As we can see here, Ethereum on the weekly RSI, this is where the RSI has been stalling. And so if you're going to move higher, which is looking like it is more imminent, if we clear this line, move above zero on the MACD, expect there to be an explosive recovery in the cryptos. I don't mean they go to new highs, but at least they come off the lows here. That concludes this weekend's market analysis video. Be on the lookout for my alerts coming into the new week as I continue scanning for new breakout candidates. As always, something I've done for 20 straight years. I am Eric with Mother.com. I leave you as I found you in the love light of the one infinite creator. Go forth rejoicing in the power and in the peace of the one creator. Adonai.